our next speaker or interviewee of the night is Alyssa Furtado, um, co-founder and co-CEO of RateHub. Alyssa, I think I first met her when she actually came to the TechTO stage in like, it got to be sometime in 2015. I think it was like early 2015, March or something like that. Um, RateHub seems to be, one of the staple companies in Canada. And you bootstrapped for a while. You went on Dragon's Den. You said no to their money, and eventually you raised some money. So you've seen the bootstrapping, you've seen the scaling, and I think you know consumers pretty well. So thank you for joining us.
Thanks for having me.
I'm a bit disappointed, Alyssa. I don't see your newborn. When
He made the sound check, but he went to bed a little earlier.
Yeah, okay.
We can join my 3.5-year-old in the bath, but that may not be appropriate.
That might get us in trouble. Don't know what's allowed legally, and I don't want to cause trouble. Let's start off with explaining. Can you explain what RateHub is and the different related properties and what they do?
Yeah, absolutely. So RateHub is a financial product comparison website. So we help Canadians find the best deals on mortgages, credit cards, checking, banking accounts, GICs, and most recently, insurance products. And then in late 2018, we acquired MoneySense, which was a media property of Rogers. And so we've been growing and expanding that over the last just over a year. And then under RateHub, we have a mortgage brokerage called CanWise. And so we've built that out to over 60 of the top agents across Canada. And we help Canadians actually close mortgages with some of the top lenders in Canada.
Full disclosure, I used CanWise for my last home mortgage.
Woohoo!
So maybe let's talk about mortgages for a second. I guess you see lots of consumer trends. You're seeing lots of reporting in when I think of RateHub, I think of mortgages.
Yes.
That property values have potentially declined, that the market shifted. Do you have insights into this, and what are you seeing?
Yeah, it's a great question. So we, as you mentioned, oftentimes when people think of RateHub, they think of mortgages. We spent the first 5 years solely focused in mortgages. So that is our largest business unit or vertical at the company. So a couple of things that we've seen. So on our mortgage business, it's made up of purchases, but also refinances and renewals. So renewals have just continued along their normal trend. Refinances have picked up a little bit as certain people need access to some of the capital that's built up in their homes. And also as mortgage rates have come down, that's usually when refinances get a little bit more interesting. And then purchases, as you can imagine, have slowed down. So we always say in our business, we're less impacted if, say, home prices came down by 10 or 15%.
Yeah.
In that case, probably more people would buy. If you think about Toronto, if home prices came down, many of us would either trade houses or buy, get into the market for the first time. And so a dip in house price is okay, but house transactions stopping is harder for our business. So we have noticed that start to happen. We're hopeful that the market is paused, and when things start to open up, we'll see transactions come back. They haven't gone to zero. It's kind of like we're in a perpetual month of February when it comes to the housing market, and we're kind of all waiting to see when the spring market kicks in.
So that's a situation, I guess, that's been brought on by the current, work from home atmosphere. So, but it's interesting. You're seeing renewals and refinancings increase. What other changes are you seeing from consumers? Either how are they looking at different products, or are they coming online more and looking for comparisons because they can't go to a bank branch? So
yeah, absolutely. So more people are going digitally to both compare, but then to also transact. So we're well positioned from that standpoint because we have built a digital brokerage. So we already weren't meeting with the significant majority of customers. So when we started the brokerage almost, 5 to 6 years ago, more came into our offices, and now the significant majority, we do everything digitally. So a combination of on our online mortgage platform that we've built out over the last 2 years, back and forth through email in some cases, a lot over the phone, but we're quite well positioned, which has been fantastic. So, as you know, one of our biggest competitors has always been, how do we get Canadians away from just walking into the branch and
Yeah.
instead starting with RateHub and using us to complete their mortgage transaction. So, it's an exciting shift to digital that we're seeing.
And do you think it's a permanent one?
Definitely. I picked up today the LCBO same day pickup. I don't know if anyone's familiar with this, but it was a flawless process. Ordered online in about 10 minutes, drove up, and someone helped me load it in my car. And that was, I thought, I hope this sticks around after COVID-19. And I think there's many curbside pickup is revolutionary for a busy working mom. So I think a lot of these trends are here to stay.
And what are you seeing change on the consumers? Like, what are they demanding? Are they looking for different credit cards? Are they looking for, or what
Mhm.
products they're looking for? Yeah.
Yeah, it's a good question. So credit cards is the part of our business that's been hit the most drastically. And it's really interesting when COVID-19 first hit, I thought, wow, I think credit cards will end up doing the best as people need access to credit. And we offer low interest and we offer balance transfer. And so I thought, many Canadians might take advantage of this. But the part I missed was that the financial institutions might not be ready to extend additional credit. So I think that they're concerned about unemployment levels and concerned about people not making payments on the existing credit cards that they have. So we've seen some of the banks take a step back and, put in place more stringent underwriting criteria. Individuals have very sadly been affected by unemployment, and so that's making it harder to qualify. And so cards by far has been the biggest hit portion of our business. The other thing is we always did the most card approvals in the travel card category. So we're always looking for lounge access and airline points. And as you can imagine, many consumers don't have a lot of interest in that right now. So that we're really taking a step back on that business, trying to work alongside our financial partners to say, kind of some of the trends that we heard from the first talk tonight. How can we send the banks the type of customers that they want so we can find that win-win-win? So really pushing down that avenue.
Interesting. Have you seen any explicit preference now that you can't get your Aeroplan points or your Priority Pass membership? Is
Yeah,
it
so
cash back or what is it?
exactly. We've seen more of our customers select into cash back. And some of the provider cards have also said, hey, for an extended period of time, you can use your points in for cash back instead. So we've seen the cards come through and support consumers as well.
And what are you doing right now to take advantage or adjust to the current situation, if anything?
Yeah, so a lot of it is on the card side, it's really pushing our providers to work with them to say, hey, we're flexible, we're nimble. Work with us to tell us what type of consumers you're looking for, and we'll work on our end to make sure that consumers are getting the cards they want and facilitate that connection. On the mortgage side, it's just being loud and proud about our message about digital mortgages, and that sort of before we were always pushing and leading on the innovation side on the digital transformation. And so I think now we're just excited that consumers have that last final push to embrace, obviously under the most unfortunate circumstances, but I think everyone's just trying to do the best they can on the business side.
Cool. I have a few more questions, but if you're an audience and you have questions, okay, I'll take Rudy's right away. That's for being so responsive. Question: do you see Schedule A banks or credit cards reducing credit limits available?
That's a good question. I think so. I haven't seen it directly through RateHub, but I read a lot on Twitter, and I think I have seen some people on Twitter commenting to that effect, especially if your primary institution has both your credit card and your checking account. I think there was mention in cases where they could pick up that there might be an unemployment issue, that was happening. But again, that's just Twitter, not I can't verify that through personal experience, but lots of good information online if you're searching on Twitter.
I thought everything on Twitter was true, verifiable. Not the case?
Yeah,
Uh,
no, I find myself, I read a lot about COVID on Twitter, and then I have to question how much is valid.
I'd like the question in from Mario, and I'll take it a step further. Will we see negative interest rates? And if so, what's the implication for financial products?
Not something that I feel like I'm the perfect expert. What I can say is this type of thing. I mean, we'll see interest rates hit rock bottom, but what we saw when rates first started to drop is banks passed those savings on to consumers and dropped rates, but then they got extremely concerned about things like unemployment and people's ability to pay, and so actually we saw rates go up over and above their kind of usual premium on bond yields, and lenders were essentially pricing in a risk premium. And so once we've seen that kind of level off a little bit, it's almost like the banks have said, okay, just picking a round number, we're going to commit to, we think our assumption is 10% unemployment, and so let's factor that in and go from there. So yeah, I think my point is, not the expert on this, and it's incredibly hard to predict all the moving factors.
Interesting. You seem to always be ahead of consumer fintech trends. What do you think the next big consumer fintech trend will emerge or idea?
I mean, I think in Canada we're still far behind, and sometimes we're limited by regulation. And so a lot of the things that I want and hope to see happen are really going to sound not very sexy. So on our push for the online mortgage application, we've been limited by lenders' ability to accept digital signatures. So honestly, all I want for Christmas is to be able to offer online signatures for Canadians in the mortgage space. So
Oh,
again, doesn't sound awesome, but just the little things like that, being able to pull notice of assessment and income verification data from the government digitally to help, just to not put customers through all of the intense paperwork and finding NOAs and previous tax returns. I think some of those basics would just do wonders to make the mortgage process as painless as possible.
I don't know. I've noticed that OREA and the real estate boards allowing now digital signatures, and
Yeah,
so and also
and
legal.
real estate lawyers.
Yeah,
So you can now meet over Zoom, and real estate lawyers themselves don't know, will this, is this just a special window during COVID, or will that be kind of the new norm? But I think about it on a personal level. I think I love people. I'm definitely an extrovert. And so I want to spend time with people, when there's a chance to connect and when there's a chance to have fun together and collaborate together. But if it's picking up a takeout order or picking up an order from the grocery store or signing documents, I want those to be as painless as possible and save us all time, and bring on the remote for forever for those types of things.
yeah. I'm sick of the financial institutions saying they need a blue ink signature, and and they check the scan to see it wasn't just pasted by my preview on Mac, which I would never do.
Yeah.
Um,
Yeah. I was trying to close a mortgage and was, really pushing the financial institution to let me sign digitally. And it just seemed crazy that I was being pushed to go into branch at this time when really we were there from a technology standpoint.
cool. I'm going to change it with this next question. Um, if you were talking to the current fintech founders that are watching, what's advice do you have to them right now about how to adjust the current situation and unknowns?
It adjust to the current situations and unknowns. It's a hard one. I think I I've been in business now for 11 years, and this has been by far and away the biggest period of uncertainty for me. And what's been so hard is not feeling like I'm not able to give my employees the certainty that they're craving. And I feel like that's, one of my core jobs as a leader. But during this time, when I'm taking in all of this data and trying to figure out my views on the future, how do I give them that certainty? And so I think my advice for other founders is just to know you're not alone in this time period. All the things that are hard, they're hard for all of us. They're hard for our employees, they're hard for our leaders, and they're hard for us as founders and our entire team. So I think what's really helped me in communicating with the team is while I can't always tell them kind of the endpoint, I can communicate all of the data that I do have and how I'm using that data to make decisions. So just trying to share with them, here are all of our, not only our revenue targets, which we normally share, but here's our expenses per month and here's our revenue targets. And if we saw drops of this percent, that's when I think that we'd be in trouble. And here are some of the levers that we'd pull to start to get things under control. And just the positive responses I've been getting from the team, just any kind of transparency and information. It might seem like the info that's in your head all the time, but not everyone on the team is in your head or has that information. So anything, even if you can't share the final answer, sharing anything along the way has just been so appreciated by my team.
I appreciate that. So we'll leave on that. Greater transparency is the main tip, and being more open. I really appreciate that. Alyssa, thank you so much for joining us today.
Thanks for having me.
Thank your kids for not running on and like mine haven't so far, which I'm surprised. And I look forward to actually seeing you and hopefully not having to sign a blue signature to get my money from next time I use CanWest.
Definitely. Thank you so much for having me. Have a great night.